Hi everyone, let's go over my two Elliott Wave triangles in this range on Bitcoin, starting with the first triangle where wave C is already finished in a 5-wave horizontal ABCDE structure, after which we expect continuation. The invalidations in this scenario is price moving above wave B or below wave C, as we first want wave D, then a move down in E, and then eventually continuation. If we zoom in to this structure over here and go to the 1 hour time frame, then we are looking for a 3-wave structure inside wave D, which is a WXY, a double zigzag structure. In a triangle, 4 out of the 5 waves have to be zigzags. It can be 5 or 5 as well, but if one of the waves is complex, then most commonly it is either wave C or wave D. And in this particular scenario, wave D is the more complex structure in a double zigzag WXY, where inside this wave Y, the common target area is the 1 to the 1.236. However, as you can see, the 1.236 is above the invalidation, so that is not what we like to see. The 1-to-1, however, is quite interesting at 70.8k, and we have also the 0.618, which is a common target, but as you can see, it's below the high of wave W, and wave Y has to be higher than wave W in a double zigzag, and we have a little bit of resistance here, as you can see, sitting between 69.7 and 69.9k. After that wave D, we are then looking for a move to the downside in a wave E, being a simple zigzag. If we zoom into this final leg to the upside being a wave Y, we are looking for an ABC to the upside. In this particular scenario, we have the target area for wave Y again over here, and we are looking for a wave B to finish finding support in the common target area for a wave B, taken from the low to the high of this wave A. It is a very big target area for your wave B, as you can see, which makes it difficult to trade a wave B, so we have to look at the subwaves of this wave B with potentially an ABC that is finished on the 05, as then we are looking for a continuation to the upside for this wave C. But in all scenarios, we always want to see some extra proof of support, and I personally like to keep an eye on the CVD. After that wave B, we want to see a wave C, finishing Y, finishing wave D, and then we look for a move to the downside in wave E. Now, something that isn't too great in this particular scenario, very locally here, is the volume in the high of this wave A over here. Now, if we zoom in to the 5-minute chart, and we have a look at the high, then what you can see is the highest amount of volume in this local uptrend is in the high over here, which tends to be a bit wave C-ish. Like, it's more common for corrective structures compared to impulsive structures. Of course, in the bullish scenario, this is counted as a wave A, B, C, and a wave A is part of a corrective structure. So of course there is probabilities for this to be a wave A, but this is actually very common for a wave C, so we have to keep that in mind. And if this is a wave C, then we have to think about a flat structure in an ABC, and this is then the beginning of a move towards the downside in the triangle 2, which I still have to talk about. Secondly, earlier in the live stream, we had the 0.618 on the chart over here, taken from the low to the high for a potential impulse in a wave 4, right? 1, 2, and then a 3, 4, and a wave 5. Reason that you want at least one more high actually in an impulse is because the highest volume, as mentioned, is in the high. This is usually wave 3 behavior, not wave 5 behavior. It's very rare for a wave 5 to actually have the highest amount of volume in the top for a traditional impulsive structure, 1, 2, 3, 4, 5. That usually only happens if wave 5 is extended, if you have a blow off top, or if wave 5 takes a very important higher low, which is not the case. So therefore, if we are looking for an impulse, preferably we were looking for 1, 2, 3, 4 and a wave 5, where wave 5 isn't allowed to hit the 0.618 taken from the low to the high. But as you can see, price hit the 0.618, reducing the probabilities for a wave 4. Secondly, this wave 4 would be incredibly long in time compared to this very small wave 2. As you can see on the chart, I have a vertical line. This is a fib time taken from the start to the end of wave 2, put on top of the high over here, and most commonly a wave 4 ends before the 6 fib time, which already is, by the way, a less common / rare target. The fact that price made a new low over here after the 6 fib time really reduced the probabilities for this to be a wave 4, and therefore probabilities are higher that this over here is a new structure, which in the bullish scenario is then a wave B for continuation to the upside in a wave C. If we then zoom out and go to the second triangle, then in this triangle, wave C is not yet finished. That is the main difference between the two scenarios. Here we also, of course, look for a 5-wave sideways structure before we then look for continuation to the upside. But now the invalidation to the downside is below the low of wave A, as wave C is not allowed to go below this wave A. If we look at close support resistance areas, then an attractive target area for this wave C is the blue box over here between 63k and 62k. If I open the naked point of controls, then you can see that currently price found some support on the range value area high of this small range over here. We still have the point of control and the value area low as well of this small little range, but it wouldn't be great to come back down here, as then probabilities are higher to move towards the downside. To the upside, we have the following resistance. We have a daily naked point of control, 68.9k. Then we have a little bit of confluence over here around 69.8k. And then it's a bit of a gap till the invalidation over here. And the next area of resistance is above the invalidation. So actually, preferably, price is not going to go above this high or this area of resistance over here. Now, in this scenario, as mentioned, we are then looking for a wave C towards the downside, hitting support, after which we want to see a wave D to the upside. In this particular scenario, wave C is the more complex structure. As explained in the first triangle, 4 out of the 5 waves have to be a simple zigzag structure in an ABC up or an ABC down, which both are 5-3-5 scenarios. And if one of the waves is complex, usually it's C or D in a double or triple zigzag. And in this case, wave C is then a double zigzag in an ABC wave W, a complex or a simple X over here, ABC, X finished, and then a wave Y to the downside. Of course, if price keeps ranging, this wave X can extend, as wave X can also be a complex structure in a WXY over the weekend, as the weekend tends to be a ranging structure. But at the moment, as it stands, that is not yet relevant. Now, if we look at the target area for this wave Y, we have again the 0.618 to the 1.236. 1.236, not interesting. It's below the invalidation over here. The 1-to-1 is in the middle of this target box over here, so that's something we keep in mind. The 0.618 is above W, so we at least expect wave Y to go below wave W. And if we go below wave W, there's not much support over here. And then we have the target box where we have the 1-to-1, so that is okay. If we then again zoom in to the lower time frames, then in this particular scenario, we are looking for an ABC to the downside. If wave X is finished, we want to see a wave A, B, and a wave C. But also here on the very low time frames, there are a few things that aren't ideal, and especially talking about this wave A. This wave A in this particular scenario has to be a diagonal structure. As you can see, there's a lot of overlap over here where we then have a wave 1, 2, 3, 4 and a wave 5 in a contracting diagonal. Then we have our B and a wave C to the downside. Now this move to the upside does look a bit impulsive, so preferably this wave A actually finishes here for then a flat structure and then continuation to the downside. But actually, that's not even really what I care about. What I mainly care about is wave 3 in this diagonal over here. If this is wave 1, this is wave 3, and this is your wave 5, then wave 3 is longer than wave 1. If you take a trend-based fib extension from the start to the end of 1 to the high of 2, then you can see that wave 3 went below the length, or actually below the 1-to-1, meaning it is longer than wave 1. And that is not really what you like to see in a contracting diagonal. It is not invalidating a contracting diagonal, but it does lower the probabilities for a contracting diagonal in wave A. However, if we are looking for this to be the end of X and this the beginning of an ABC, then it has to be a contracting diagonal, and we're going to be looking for a wave C towards the downside, where the common target area for wave C is between the 1 and the 1.236, which is above wave W. And remember, we are working on a wave Y, ABC to the downside in Y. So this target area is not interesting. We need to hit at least the 1.618 to also get close to this target box here. But the 1.618 is a less common target area for a wave C. So that is actually quite interesting. And I keep repeating this, the weekend is coming up as well. So if we do get a continuation of this range, this wave X might still go and be placed at a later stage, but that depends on what we get locally. If we look at the CVD divergences, then we had some bearish CVD divergences here at the high on the 3 and the 15-minute AGGR chart. More information in the CVD video that I'll mention at the end and in Discord. Here on the 15-minute, you can see lower high on price, higher high on the CVD on blue, same is visible on the 3-minute time frame, and price moved to the downside below this low, which therefore makes this bearish CVD played out. So that one has played out now. CVD is now pretty neutral, and we just wait for new information to come in. If we then look at the probabilities of the different scenarios, I do have quite a bit of a probability box, as you can see over here, where in this box on the 4-hour chart, probabilities at the moment are highest for a triangle. It is very difficult to make a choice between triangle 1 or triangle 2. Like, my personal feeling gives me a very slight edge towards triangle 1, but preferably I would like to wait for more clarity over here. Like, if I would have to enter a trade over here, I would not have enough confidence in a certain scenario because of the price action that we have locally, and therefore I can't necessarily say triangle 1 or 2, but my feeling says triangle 1 over here, but it is very close between the two, right? So that is why they both over here have the number 1 spot. On place number 2, we have a WXY, which is a scenario I didn't cover in this live stream. I did cover it in previous videos. It is a WX and then a wave Y over here, either in a triangle where we then have an A, B, C, D, E range over the weekend, and then we move towards the upside, or a flat in a wave Y, which at the moment is not really something that we're thinking of because we first need to take these highs in that case. And on the 3rd spot, not the 4th spot, we have a diagonal 1, 2, 3, 4, 5, which would be the most bearish scenario covered in previous videos, not here, and this also at the moment is not a high probability scenario. Now, the reason why triangle 1 and 2 are on the 1st spot is also because of the negatives of both scenarios. Triangle 1 negatives is that the highest volume, as mentioned, is in the high of that wave A, as explained. And something I actually forgot to cover while talking about that scenario is that if we want to finish a wave over here, right, then that means that this wave X, let me actually get the blue count here, so this wave X likely has to be a WXYXZ structure, as we can clearly count some sort of a 5-wave move here, and a WXYXZ is a rare corrective structure, so that's something to keep in mind as well. And when we look at the triangle 2 negatives, then in the diagonal, as explained, wave 3 is longer than wave 1, which is not ideal. And if we want to look for a wave C target area, then the target for wave C, the 1.618 over here, is above the target box. It is already a bit of a less common target, so that is also not ideal. So at the moment, I prefer to wait patiently for more clarity. The weekend is coming, so commonly during the weekend we have a ranging environment for 2 days. My feeling is still getting a little bit towards triangle number 1, or at least a bit more upside before downside, but I don't have the confidence, I don't have the backing at the moment from an Elliott Wave point of view to really jump into that and put something on position 1 and another triangle on position 2. So I like to be patient, see what price is giving us, and that is also what trading is about sometimes. Sometimes it's not very clear. We remain very patient, see what price is going to give us. On the higher time frames, the probabilities are very clear, where we are looking for a wave 4 and then a 5 to the upside, but very locally over here, especially on the lower time frames, I like to be patient and then take it from there, see what the weekend is going to give us. That being said, I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.